Welcome to the Money Knowledge channel. In this video, we will talk about how the stock market works. If you're not familiar with the basics of the stock market, all the financial news and trading information from the media can certainly be overwhelming. Over the next few minutes, I will teach you some basic information about how stock trading works so you will have a better understanding. The reality is that investing in the stock market carries risk, but when approached in an educated and disciplined manner, it is one of the most efficient ways to build up your personal wealth. So what is a stock? When you buy a stock of a company, you buy a piece of the business. As such, you are a shareholder of the company and shares in the financial successes or failures of the company. Companies raise money from issuing stock and use the fund raised to grow. And investors buy stock of the company hoping to make money for the company to succeed. Now, let's imagine there is a new toy company that wants to raise funds in the stock market. First, the company will promote itself to big investors. If they think the company is a good idea, they will invest in the company, and then sponsor the company's initial public offering, IPO. This launches the toy company onto the public stock market, where people who think the new toy business could be profitable might buy a stock. After the company issues the stock will be traded in the open market, such as New York Stock Exchange. Buying stocks makes the investors own a piece of the company. The money they invested provides funds for the company to grow. For example, the toy company can use the money raised from the stock issuing to create a number of new toy products that will help the company grow even bigger. Investors buy stock of a company with the hope of earning a good return on their money invested. Generally, shareholders will see a positive return if the company's business goes well and makes a profit. As the company becomes more successful, more potential buyers want to buy the stock and earn profit from it. When demand for the stock goes up, so does the price of the stock. However, the opposite can happen too. If investors think the company would become less successful. For example, if investors think the new toys that the company makes will not do well, then the investors will sell their stocks in hopes of making a profit before the company loses more value. As more investors sell their stock, the stock price falls. Let's talk a bit more about how the share price of a stock works. Share prices are set by supply and demand as buyers and sellers. Most commonly, the prices of shares on a stock market is set through an auction process, where buyers and sellers place bids and offers to buy or sell. A bid is the price at which somebody wishes to buy, and an offer is the price at which somebody wishes to sell. When the bid price and offer price meet, a trade is made. The overall market is made up of millions of people, and they may have different ideas about the value of a specific stock, so they have a different mind of the price at which they are willing to buy or sell it. So basically, stock prices fluctuate as the perceived value of the company changes. So what is the stock market? The stock market is made up of exchanges, such as the New York Stock Exchange and the Nasdaq. These exchanges bring buyers and sellers together and act as a marketplace for buyers and sellers to transact. The exchange tracks the supply and demand and the price of each stock listed. So when you buy a share of stock on the stock market, you are not buying it from the company, you are buying it from some other existing shareholder. Likewise, when you sell your shares, you do not sell them back to the company, rather you sell them to some other investor. To buy or sell shares, an investor has to have an account with a brokerage firm. Your orders to buy or sell are carried through your broker, which then deals with the exchange on your behalf. There are dozens of stock brokerage houses in the United States. The Big Four are often referred to Charles Schwab, Fidelity, E-Trade and TD Ameritrade. So here are the basics of how the stock market works. I hope you like this video. Do you have any questions about personal finance? Put them down in the comment section below, and I will help answer them. Investing in individual stocks takes time. You should research each stock you purchase, which includes a deep dive into the company and its financials. Many people, instead of investing in individual stocks, would invest in mutual funds or ETFs. I will talk about the different investment vehicles in future videos. So to stay up to date, make sure to subscribe to this YouTube channel by clicking the subscribe button. Until next time, stay safe, happy money management. Thank you.